So, all of us know that the price of oil has collapsed. You could look at it from the mid of August 2013, right, when the Syria situation was going on, or a conflict in Syria. It was 113. Right now, it's $54. So let's do the math right now. So, like 100, let's just do 112. So doing the math, so it's roughly a 52% fall in the price of oil in less than a year and a half. That is a huge move. Last time I saw such a huge move was in 2008, where you saw the price of oil go from $150 a barrel to roughly $30 a barrel. I think it was $144 a barrel, and maybe $39 a barrel for oil. But regardless, that was a huge move to the downside. Over 60-70% move. And this is over a 50% move, and it just happened all at once. And if you look at it earlier this year, the U.S. applied sanctions on Russia, right, in April, so maybe around here, where the price was 100-ish. And ever since the sanctions, right, you saw a choppy market, it still went higher, then all of a sudden went lower, right? More sanctions applied later on throughout the year. Boom, price of oil goes down. And what was quite interesting was you had headlines where the Saudis said that we're not going to adjust the supply of oil. We're not going to have more oil, less oil in the market to try to increase the price of oil. And a lot of people are saying, hey, that's the reason why it went down. Do I think there's manipulation going on? Oh, yes, no doubt in my mind, there is. However, I think if you look at the surface beneath this, or if you look at what's going on beneath the surface, there's more to this, and there must be some liquidation going on among these big players. Or there is liquidation, but I think when people are talking about this move to the downside, solely saying that it's manipulation by the banksters, the Western elites, and the Saudis, yeah, I do agree there is, but we have to look at another story. Let's look at this right now. So it's Fibros, however you say it. Hall reports largest drop at Aston Beck Fund. And before I get into oil, I am long the OIH and the RSX, which has to do with oil. OIH is the oil ETF, and then the RSX is a Russian ETF. But anyways, let's go to this right now. Andrew J. Hall, the oil trader whose $100 million compensation while at Citigroup ignited controversy in 2009 over packages at bailed-out banks, posted his commodity hedge fund's biggest annual loss last year. Aston Beck Capital Management LLC, the $3.5 billion fund company that is 80% owned by Hall and 20% by Occidental Petroleum Corporation, lost 8.3% in its main fund, according to an investor letter obtained by Bloomberg News. That loss, the second in the six-year-old fund's history, was extended in January with a 2.1% decline. So, long story short, we have individuals within Occidental or Aston Beck slash Fibro. They are having huge losses, and the question is that they liquidate a large amount of funds, whether it's in derivatives markets, whether in the future markets, whatever, which had a negative impact in the price of oil. I think it does, but once again, I don't have access to what they traded on, so I can't say with a shadow of a doubt. But in my opinion, it's quite rare, or I mean, it's really strange to see a move like this, right? It goes from 110, 113, all the way to $54 within a short time frame. I mean, yes, China is slowing down, so that makes sense why oil prices could be going down. We also see the Saudis saying that we're not going to adjust the supply, and they want to bankrupt the fracking industry, or many of them as possible. So that makes sense. But I think it has to deal also with this liquidation going on with these huge funds. And I believe, once again, Fibro is one of them. But that being said, 50% move. The price of gold, I don't think it didn't get hammered as the price of oil did. And let's take a look at this right now. I mean, let me just adjust this. Going over here, let's go to the 3-year chart. So as you can see, just notice how it was around 1800 a few years ago, but it didn't go down a straight line. If you want to look at the top in 2011, let's just look at it. 1920 minus 1140 at the low on that Sunday. Remember that Sunday where the price of oil just collapsed? But anyway, the price of oil, not price of oil, but price of gold collapsed. And then the next morning, the price of gold went back up. So this is roughly a 41% correction. So that's quite interesting. Top 1920, the low 1140-ish. Comparing the oil market to the gold market, it seems like gold has been relatively stronger than the oil market. I mean, the price of gold, it didn't drop down in a straight line. If you go back a few years, right, you have to look at the fact that it went down in a choppy fashion at first in 2012, and then all of a sudden you had this yen carry trade come into play, 2013, where the dollar yen got weaker against the dollar, right? The Japanese yen got weaker against the US dollar, and as a result, we've seen this movement to the downside in the price of gold. So what are my thoughts going forward with all this? Well, first of all, you know that the dollar index right now is 89 on the Dixie, right? 89.43. This is close to the highs that we saw in 2009 and also 2010, around that time frame. And then once you hit that 89 level, for some weird reason, you saw the dollar starting to weaken right after that moment. You have to remember, these central bankers hate deflation. I could show you a chart right now. Okay, so if you look at the top of the dollar in 2008, 2009, 2010, right? Hit the top of 89. Where are we now? So we're over here right now. 2014 top. It looks like there's a top right now at 89 point, what is it, 43. It was a little higher some time ago. I mean, not some time ago, but just recently. That being said, what do you guys think? Do you think this is a short-term top in the price of the dollar? And then, what do you think about oil and gold? We know that oil has been crashing. Gold prices have gone pretty much nowhere this year, even though it's gone slightly higher. So we see the dollar getting stronger, oil prices getting lower. It just seems that for a technical bounce, I wouldn't be surprised if we see higher oil prices right now within the next month or so, month or two. But then after that happens, well, we shall see what occurs, because what's going on is, if you're looking at China right now, the 7-day repo rate is rising up. The Baltic Dry Index, I mean, that ain't doing so well either. That's showing that you have a slowdown in economic activity. So if that is occurring, what's happening right now, in my opinion, is a deflationary head fake. But once again, markets, in my opinion, do not go down in a straight line. I mean, you always have bull markets within bear markets. So that's something to note. I just want to show you one more dollar chart before I head off. So if you look at this chart over here, you see dollar index here topping out, looks like a topping out pattern here in the interim. And then if you look at the MACD, right, it's not making highs while the dollar is making a short-term high. So looks like bearish divergence, but we shall see. What do you guys think? Leave comments below. I'll talk to you guys later. Bye.